Okay, you guys, we'll start back now on problem 1-2-1-2A on page 40. We'll pick back up with instruction 2. Prepare a retained earnings statement for the year ended December 31st, 2016. Now, like the income statement, the retained earnings statement covers a period of time. So first, again, we'll do the heading. We start with the name of the business, which they have filled in for you. Then the name of the financial statement. This is our retained earnings statement. And it covers a period of time, so it again is dated just like the income statement for the year ended December 31, 2016. Okay, now remember I mentioned this and we went over it in the lecture, but retained earnings is increased by net income or profit for the year. It's decreased by dividends declared, or in this case, I guess dividends declared and paid are the same thing. We don't need to get into that now. But it's increased by net income or profit, decreased by net loss and dividends. So what we're going to do is start with the retained earnings balance on the first day of that year, January 1st, 2016, and that's given in the book. Second sentence, that balance is $600,000. You can really think of it as combined profit since the business began, less any dividends paid to shareholders. And again, dividends are just a return of the profits of the corporation to the owners or shareholders of the corporation. All right, now we want to do any increasing items first. So remember we said retained earnings is increased by profit or net income for the year. Well, we had net income up here, $327,500. So we'll put net income for the year, $327,500 from here. Now, retained earnings would be decreased by dividends. Also be decreased by net loss, but you can't have both net income and net loss in the same accounting period. You'd only have one or the other, of course. So we did have dividends during the year. The company dividends of $42,000 were paid. Dividends decrease retained earnings, so we'll put in the $42,000 here. All right, then we're going to take the difference in the two. Net income increases retained earnings. Dividends decrease retained earnings. When we net the two together, net income is larger than dividends, so for the year we're going to have an increase in retained earnings. And we're going to have an increase for the difference in these two. So we'll say $327,500 minus $42,000. We end up with an increase in retained earnings of $285,500. Since that's an increase, we'll add it to the beginning retained earnings balance. Of course, had it been a decrease, we'd subtract it. Had this been a net loss, we'd add together the net loss and the dividends. But I think you see how that would work. Okay, so we'll take our increase in retained earnings, add that to the beginning retained earnings balance. So we've got $600,000 plus $285,500. That gives us retained earnings at December 31, 2016 of $885,500. Okay, let's move along to the third instruction. Prepare a balance sheet as of December 31st, 2016. You guys, our balance sheet doesn't cover a period of time like the income statement and retained earnings statement did. Instead, our balance sheet is prepared as of the last day of the year, or as of a specific date. In this case, the last day of the year. It would always be the last day of the accounting period. But just like the retained earnings statement and the income statement, we start with a heading. We first use the name of the business, Nordic Travel Agency, on the top row. The name of the financial statement, balance sheet, on the second row. And then on the third row, we'll put in the date. Well, since this one's prepared as of a specific date, we don't put for the year ended. Instead, we just put the date. And on the left-hand side of the balance sheet, we want to list our assets. And you guys, we're going to list those in order of liquidity, meaning the easiest to convert to cash first and then on down the line. Well, that means cash would always be listed first. Then with accounts receivable, we've already provided services to our customer on account. We're just waiting on them to pay us. So that's our next most liquid asset, or next easiest to convert to cash. When accounts receivable goes on the books, we expect it to become cash in the very near future. And you might be thinking, well, what if they didn't pay? Well, if we think they're a threat to not pay, then we would not sell to them on account. We'd require them to pay cash. Now you're probably thinking, well, we're going to be mistaken sometimes, and you're right, we would be. But we'll talk about that in a later chapter. Okay, supplies. You guys, when we purchase supplies, we just plan on using those in the business. We don't ever plan to sell them. But if we needed to, if we were going out of business, maybe we could sell our supplies, return some of them, and get some cash back. And we could probably do that more quickly than we could sell land. So land is considered to be the least liquid of the four asset types we have here. So let's list our balance for cash. That's given as $190,500. Accounts receivable is $285,000. Supplies is $5,500. Land is $544,000. Okay, we'll come back to the total. For the liabilities, you guys, here we only have one, and you probably know that because there's only one space for liabilities. Now, they still write the name plural in the plural form, even though there's only one. For some reason that bothers me a little bit, but I've looked into it. That's how it's done for sure. You remember our only liability account here is accounts payable. That's where we have made purchases of goods or services on account, and we promise to pay the creditor in the near future. Our accounts payable balance, I'm not sure why they have you to put the accounts in over here and they listed them for you on this side. I'd rather you have to list them everywhere, but anyway, I guess that makes it a little easier for you. Okay, and our accounts payable balance is $69,500. A little trick to help you remember, given an account, what type of account is it. If it ends with the word receivable, it's going to be an asset. If it ends with the word payable, it's going to be a liability. Maybe that helps a little. Now we go to our third section, stockholders' equity. You guys, here we'll list our stockholders' equity accounts. One we talked about earlier is common stock. We'll list it first. And that's just the par value of the shares that we have issued to our shareholders. In this case, that's $70,000. And then we'll also list retained earnings. Now, an easy mistake to make here would be to pick up the retained earnings balance given in the book, which was $600,000. But remember, that's the January 1st balance. We're now at December 31st. So we want to pick up the amount from here. The December 31st, 2016 retained earnings balance is $885,500. And that's retained earnings. Now, total stockholders' equity, to get that amount, we'll just add these two together. And you guys, they would have had a separate line, total liabilities, had we had more than one liability account. We didn't. So, In this case, there's no need for that. Let's add these two together. The 70,000 plus the 885,500. That gets us to 955,500. Now let's total each side. Let's go back over here and do total assets equals the 190,500 plus the 285,000 plus the 5,500 plus the 544,000, and that gets us 1,025,000 for total assets. Now let's get our total over here. Total liabilities and stockholders' equity. Well, we're going to add together our total liabilities, 69,500, plus total stockholders' equity, 955,500, and that equals 1,025,000, which matches total assets. Now, if you remember, that's also our accounting equation. Total assets are equal to liabilities plus stockholders' equity. And that's back in your lecture video. So you guys, let's look at how these connect. Net income, first calculated on the income statement, carries forward from the income statement to the retained earnings statement and connects those two. Becomes a part of the retained earnings balance. Net income does. And then retained earnings carries forward from the retained earnings statement to the balance sheet. And it becomes a part of total stockholders' equity and total liabilities in stockholders' equity. It connects the retained earnings statement to the balance sheet. So really all three are connected. Okay, now our fourth question, what item appears on both the retained earnings statement and the balance sheet? Well, I think I answered that one for you already. What is it, you guys? I think you know. Yeah, it's retained earnings. And its balance was, what, 885,500. And now one thing you're probably going to like about these templates, we won't use them for every problem we work. We are here in chapter 1. But you'll notice as you go along, it grades it for you. And thank goodness it worked out for me. We get 100%, and that's what you're shooting for, I know. So you can kind of check your score as you go on these templates that grade it for you. And the B problem, your homework problem, will work that way. You guys, work this one along with me on the problem 1-2A Excel template. And then you should be ready to try the homework problem, problem 1-2B. If you have questions, please feel free to contact me via email. Or you can reach me anytime on my cell at 828-593-0459. And you can use that for accounting questions or Haywood Community College questions or concerns anytime. I don't mind you calling that any time of day. Now, if I don't answer, I'll call you back. If I'm asleep, it won't wake me up, and if I'm awake, I'll talk to you. All right, good luck, and thanks a lot.